Okay, guys, so we'll be doing a live analysis and trade on Nasdaq, and I'm expecting a bullish move on Nasdaq. Stop loss should be here, and we'll be targeting this right here. Okay. So why am I looking for a buy setup? All right, so the reason why I'm looking for a buy setup is because of this swing point that we have right here. All right, we have, let me go to the higher time frame. All right, so the Nasdaq has been trading in an uptrend in a bullish trend line, right? So let me go to the daily time frame, and the trading has been choppy. All right, so the most recent one we have is this fair value gap in which it traded into, then trades higher. Now after trading higher to give us this high, we see how it impulsively trade lower, right? 1 2 bearish candle trading lower, and it did not take any low. All right, looking at this, we did not actually have any bullish structure that was taken. All right, even when you look at the weekly time frame, you can actually see there was no bearish structure. Sorry, there was no bullish structure that was taken out. And also the only place we might have eyes on would be this weekly fair value gap. All right, so I am not seeing any bearish market on the Nasdaq, seeing bullish because the overall trend has been bullish, right? So yeah, all of these liquidity pools, all of these movements right here are liquidity pools, because they are traders who are trying to buy, and what the market did was to impulsively take every buyers who are resting on these sell stops. All right, so now what we did now is that price traded backwards to create an area of resistance, and that is right here. All right, so most of us we are most likely going to see this, and we say is a breaker block or sort of, and that is what price did actually trade into it, because this was a demand zone that was violated, or another block that was violated. So a violation, an impulsive violation of the demand zone, price will test that candle low and then sell. Now as it tested it with a high, and they will finally have a low. There was no structural shift done. All right, so that doesn't confirm that I will be looking for short position on the Nasdaq. All right, so in this case I would like to target this high if I were a position trader, right? But for day trading, I could just target this high right here. All right, that would be my area of target. Okay, so we'll be looking forward to see it go for inefficiency, go for this buy stop and this buy stop. All right, so now what are we having right here on the Nasdaq? What we have right here on the Nasdaq was that we see that when price was let me explain from this point. When price was trading lower, you can see it filling up inefficiency, then sort of we did a hunt right here. Price trade upwards, price opened on Monday, trade higher, violating. Some traders might be looking at this as an area of supply and they wanted to sell without even noticing that price has already done the mitigation right there by selling off from this fair value gap, and then it impulsively violated it and tested this, then giving us a high. So now it traded lower to give us a low. And where did it trade into? It traded into this area of demand. Now this demand was created to kick out any trader who was trying to sell from this point, and that was why we have that impulse right there. So what are we having? We're having a fair value gap, an area of inefficiency that the price filled up, and we'll be looking forward to see it go higher. So that was the reason why I'm taking that buy position. All right, so we trade into it, and you can see that it was trading it traded into it has a bearish structure, right? So the first thing I want to explain, because I like to give deep down analysis. All right, we have traded into inefficiency from this sell side, right? Then we trade lower, so we have this high and we have this low, trading into that area of demand zone, mitigating, filling up areas of inefficiency, right? So we have this high and this low. Now if you look very closely on this 45 minutes that we are, you can actually see that there was no order block with a fair value gap left for the price to react for sales. All right, the only place that it had available was here, in which it has been filled up already, right? It has already been filled up, so price impulsively violated it and trades into the premium, right? So this is a high, and then it traded lower to give us a low. There was no structural shift given when price, because some of us might still be looking at the supply zone to sell, right? So for you to sell, you have to have that confirmation. And what is the confirmation? The confirmation is price to trade into it as a high, trade it as a low, trade as a high, then violate a low. Let me give you a schematic. So it should trade high, low, high, tap the supply zone, violate the recent low, kicking out that demand zone. All right, then finally sold off. But in this case, we are having is printing higher high and higher low. Now this higher low traded into an area where we're having inefficiency. It traded into it. If I move also to the 1 hour time frame, let me just take all of these drawings out. All right, so here we are. If I move to the 1 hour time frame, you actually see trade into this buy side inefficiency. And using the sessions, New York, Asian and London session, you can actually see that this is the Asian session. You can actually see a gray shade right there. So Asian, London took the high, but there was no bearish trend or bearish structure that was given or formed. I forgot to take a screenshot. All right, so that is what I'm seeing on the Nasdaq. Now also on the 1 hour time frame, if you look closely at this candle where I have my stop loss, excuse me, if you look at that candle where I have my stop loss, you can actually see that that is a swing low. Now how is it a swing low? If you look at the candle by my left right here, candle at the center is lower than that of the left. Then my right hand candle trade higher, trading above the opening price of this candle on my left, right? So that means I'll be looking forward for a bullish, and this swing legs are used to confirm, you know, when you're having a higher high, higher low, lower lows, lower high. So for a lower low, lower high trend, you're expecting to see a swing high. For a higher high and higher low trend, you're expecting to see a swing low being formed to confirm that price is gonna to reverse. And that candlestick is also seen as a bullish reversal, right? Kind of. So yeah, I am going to pause this video and we get back when price delivers to take profit. I would love to target up to this high because I am more like a trader that like holding trades for weeks or a month. All right, so yeah, I could open two positions, one for this high and one for this one to leave the other one running. All right, so if I were a day trader, I'm just targeting that high and I'm done. And I also wanted to do something. Let me look at my weekly candle. All right. All right, so that is my previous week high and low. Going down to the 4 time frame. So right here, that is a daily range. All right, so this is previous week high, this is previous week low. Take my Fibonacci, high to the low. So we traded into equilibrium, gave us a high, and then we now trade into discount. So this is a reasonable place for me to buy because we are at a discount price. All right, so we are at discount pricing. Some of us, we like to use the bodies of the candle because of line chart, you know. So this high and this low. So price trades into the discount 23 Fibonacci level. Right, so we are now having high trading to equilibrium. Equilibrium gave us a low without showing a sign of going bearish because there was no structural shift. All right, so this is a high, low. So I'm expecting a new high to be formed. So we break this high and we're looking forward to see it trade into premium pricing. Trade into premium pricing and go for the high. So that is what I will be looking forward to. All right, so I think it's time to pause the video and we will wait to see what happens. Okay guys, so here we are on Nasdaq. So you can actually see that price is almost this, that's traded 50% to go to our take profit for the day, and we're looking forward to this high next time. If I'm doing my position trading or swing trading, then yeah, but for day trading, just targeting the recent high. All right, so you can actually see what happened right here. Price ranged right there, and then we finally saw that big move on New York session. Now the perfect time, the most reasonable time in which the market moves is during the New York session, and that is the 9:30 New York time. All right, I set my trading view on UTC -4, which is New York. So I'm using the New York time. So you can actually see that the big move happened during when? During 9:30 New York time. We now see that big move. Right, so scalpers could target this high or this high. Day traders just target previous day's high, right? And then you're done for the day. All right, previous day's high. So yeah, you can also see right here, Tuesday, you can see that the big move happened on 9:30 right there. It's still down. Let's look at Monday. So Monday, the same thing, 9:30. We now saw that big move going higher, targeting week highs. Alright, so that is it for Nasdaq, but I will pause for now. So I will come back later to see how we end for the day. All right, targeting this high. So I can now move my stop loss, make it tight, leave it on this low right there, and yeah, we see how it goes for the day. Okay guys, so here we are again on Nasdaq, still on the same video. Remember I did a pause and now we're back again. So you can actually see that Nasdaq is going well. So if you could remember, I shifted our stop loss to this low, right? So we had the stop loss here before, and when we had that rally upwards, we shifted to this low because that was the recent swing low that we have, because this is a low, high, low. So that was the reason why stop loss was shifted to that area. So yeah, we now see a trade higher for this high, and it starts to wick up and down, filling up inefficiency, and we are now finally drawn to the premium of this range high and low from previous day, right? This is previous day's high, this is previous day's low. All right, so Wednesday opened, this is the opening price of Wednesday. This line you see here is open day, is opening price, and I marked it out from 00 hour. All right, so right there, 00 hour, and I drew it right there. So if I have to buy, if I anticipate for a buy, then I should be buying below opening price. And what is below the opening price? What is actually below the opening price is this gap that we have right here. All right, so sorry about that. So we have an opening price, it trades higher, it trades lower. So this gives us a high and a low. All right, swing high and swing low, high, low. Not a bearish trend, not a lower low, lower high, but a price swing, right? A swing legs. So high and low, and that low was traded into the favorable gap that Asian session left behind. All right, so we now look for a buy setup from that below the opening price, and which is being confirmed by this swing low we have right here. All right, so yeah, so have to take the buy from the fourth candle and go higher to this high. Now let me explain again. We have previous week high and low. If you take your Fibonacci, you use your Fibonacci to measure the high and the low, marking out your premium, your equilibrium, and your discount price. So if I zoom, sorry, the Fibonacci does not zoom. So if you look closely, this black line is the equilibrium price, the red and the yellow line is the discount price, the green and the blue line is the premium pricing. Price, after giving us a swing leg, Monday opened, trades higher, trading higher into equilibrium price, which gives us a swing low. So we have high, sorry, a swing high. So we have high, low, high, right? So Tuesday trades lower and gave us a low, trading into a discount price of the equilibrium. And I also use the body of the candle because most people draw Fibonacci from the body of the candle. You can actually see it is still in a discount price. So it makes more sense to buy from a discount price. I also made mention that this trade also lower to fill up this gap that we have right here, this inefficiency that we have right here. We are not supposed to sell for the reason that there was no shift of trend. If price trades higher into a certain area and you want to sell, you will have seen it break a demand zone or a bullish order block before you look for your sales. But in this case, we only have high, low, right? High, low. So my next expectation is to see a new high. All right, so that I can now be having this expectation of printing higher high, higher low, higher high, higher low. All right, so we only have high, low, and the next expectation was that high, which is now seen on today price delivery based on the opening pricing and this low right here trading into an inefficiency. Also having the idea of sessions, you have the Asian, London, and New York session. So if I activate the London, New York session, this is the Asian session, right? And this is London. London opened. The only thing London gave us was again this high and this low. All right, there was no structural shift because structural shift is seen from here: high, low. This is a range: high, low. Price trades higher and gave us a low. There was no structural shift. All right, so we now trade upwards, trade lower, trading into this fair value gap, because if you look very closely you can see what happened on London, right? So London, let's say London was trading lower, so you have high, low, high, low, high, low, right, which took out this liquidity right here, and we now trade higher, violating this high and also this high. So what are we having? We have a change of character and a break of market structure. Price trades backwards to area of fair value gap, and then starts to buy from there. Most people will see this and call it a breaker, but I'm not too good at the breaker block, but I know what breaker block is, which is the buy candle responsible to break this low and then price trades out of it. Now a breaker is mostly seen when it breaks a support level or resistance level, so that buy candle is referred to as a breaker block. So price trades into it, but I don't usually pay attention to breaker blocks. So price trades into it and we now see trade higher, and then 9:30 pricing, boom. All right, so all of this, just not to look noisy, just pay attention to only the 15 minutes time frame and also the higher time frame, what the market is doing. All right, so also remember we also had our confluence from higher time frame, which is the weekly and the daily time frame, right? This is our previous week highs and low, and then we now enter the range. So we took previous day's low, and the expectation is to see a continuation to go higher. So we'll be expecting Monday to maintain the low of the day. So remember, I said as a position trader or a swing trader, position trader, right? If you hold for more than 1 week is a position, right? So my main target was that previous week high, all right, leaving previous week low protected. Yeah, I still know that I have to pay attention to reaction from this fair value gap right there, which is at the premium price of previous week high and low. All right, so that is it, guys. Today's trade was fine, very successful. I love trades like this, like quick rally, you understand, without any stress. So I guess that is just it, guys. Take care and be safe. See you on the next live analysis. Take care.